Bank OZK released its earnings for 2020 Q3 on 22 October 2020. Amidst the economic downturn, Bank OZK beat both the earnings and revenue estimates. Its diluted earnings per share of 84 cents beat estimates by 26 cents, and revenue of $251.3 million beat estimates by $7.0 million. Overall, compared to 2020 Q2, core spread improved, but net interest margin (NIM) decreased as OZK held on to more liquidity. Loan growth was mediocre, as OZK continued to focus on quality over growth. Efficiency ratio came down slightly, and provisions had decreased significantly, thereby leading to much higher net profits. Here's our detailed summary of the 17 key points from the quarterly earnings results and earnings call. Net interest income for the quarter was $224.7 million, an increase of 2.7% from the $218.8 million in 2019 Q3, or a 3.7% increase from the $216.6 million in 2020 Q2. This was the second consecutive quarter of increased net interest income, which resulted from good growth in average earning assets combined with improvement in their core spread. Net interest margin (NIM) was 3.69%, down by 0.57% from 2019 Q3, or down by 0.05% from 2020 Q2. Although NIM was down, Bank OZK still outperformed their industry in terms of NIM. This lower NIM is due to rapid cuts in the Fed funds target rate and Bank OZK's increasing amounts of assets with high liquidity but low yields, in the form of cash balances and very short-term securities, to better position themselves for the economic uncertainty. The management expects to continue to increase their core spread by adjusting the deposit interest rate down. However, they expect it will take several quarters to adjust their deposit rates down to more closely align with the reduction in loan yields. During this quarter just ended, OZK was able to retain 81% of their consumer time deposits that matured with deposit interest rates that are around 1.25% below the previously paid average rate. This resulted in their weighted average rate for all outstanding time deposits declining by 0.28% from June 2020. Looking into 2020 Q4, time deposits of $2.24 billion with a weighted average rate of 1.58% will mature, which will further widen the core spread when they are replaced with deposits with lower rates. Given the above, during this quarter, Bank OZK was able to reverse the declining trend in core spread as a result of continued reduction in their deposit interest rate. Net income for 2020 Q3 was $109.3 million, a 5.2% increase from the $103.9 million 2019 Q3, or a significant 117% increase from the $50.3 million in 2020 Q2, as provisions were much lower. The total provision expense for the quarter just ended was $7.2 million, a significant reduction from the $117.7 million in 2020 Q1 and $72.0 million in 2020 Q2. As of 30 September 2020, the allowance for outstanding loans was $308.8 million and reserve for potential losses on unfunded loan commitments was $68.4 million, resulting in a total allowance for credit losses (ACL) of $377.3 million. The calculation for provision expense and total allowance for credit loss was based on assumption of economic forecasts provided by Moody's. Being conservative as always, the management also did some adjustments to increase allowance for credit loss to capture items not being fully reflected on the forecasts. Non-purchased loan yield was 5.15%, a 0.95% decrease from 2019 Q3 and a 0.07% decrease from 2020 Q2. As of 30 September 2020, the balance of loans originated under the Small Business Administration's Paycheck Protection Program was $0.46 billion, with annualized yield, including fees associated with the loan, of 2.8%, minimally diluting the overall net interest margin. The management expected that the majority of such loans will be forgiven in 2021 Q1, which would reduce the amount of loan book that OZK can earn interest on then. On a bright side, at the end of September 2020, 93% of the funded balance of total loans were at their floor. So even if Fed rates continue to drop, it won't impact OZK much. On total loans balance, it increased by $47 million from 30 June 2020 to $19.4 billion on 30 September 2020, which is a 0.2% increase. The growth in loans balance is minimal as the management continues to focus on quality of loan over growth. Total loan yield is 5.21%, a decrease from 5.27% in 2020 Q2. As the management mentioned since last quarter, they expected Real Estate Specialties Group, RESG, to be the largest contributor to total loan growth in 2020 and community banking teams to be the secondary contributor. The indirect RV and marine portfolio is expected to continue to shrink in 2020. Non-purchased loans accounted for 94.8% of total loans. At the end of this quarter, the balance of non-purchased loans increased by $173 million, or 0.9%. RESG accounted for 62% of the funded balance of non-purchased loans. RESG's funded balance of non-purchased loans increased by $0.58 billion in 2020 Q3. The growth in non-purchased loans has been limited due to, among other factors, the high level of RESG loan repayments, which was expected to continue or accelerate next year. Purchased loan paydowns will also continue to be a headwind to overall loan growth in 2021. On investment securities, as economic uncertainty, their liquidity position continued to grow and they continued to purchase high-quality, very short-term security, which have relatively low yields. Net charge-off (NCO) ratio for this quarter was 0.09% for non-purchased loans, 0.17% for purchased loans, and 0.09% for total loans. Their NCO for non-purchased loans has averaged only about one-third of the industry's NCO and has outperformed the industry's NCO every year since IPO. Furthermore, the trend for NCO for the industry is going up while the trend for OZK's NCO is coming down. Let's hear from Mr. Gleason, the CEO and founder of Bank OZK, about NCO. So the secret to our 24 years now of having outperformed the industry on net charge-offs every year and having averaged about one-third of the industry's net charge-off ratio over that last 23-year period of time as a public company is a result of the fact that not just our RESG loans, but all of our portfolios are underwritten and serviced to a very conservative standard. So we think these portfolios will perform well in the downturn. Our aggregate portfolio was really underwritten and designed to withstand the rigors and challenges of a very adverse economic environment. So we feel like we are very well prepared for this environment. Non-performing non-purchased loans to total non-purchased loans was 0.15% in 2020 Q3. Slightly decreased from 0.18% in 2020 Q2 and way below the industry average. Again, the management expected the asset quality to continue their long-standing tradition of outperforming industry average. Tier 1 leverage ratio was 13.4%, over 2.6 times the Basel III leverage ratio required to be considered well capitalized, slightly lower than the 13.5% in the previous quarter. Non-interest expense for 2020 Q3 was $105.6 million, a 4.7% increase from the $100.9 million in 2019 Q3. Due to COVID-19 pandemic affecting some permanent changes in the market, OZK has adjusted many aspects of branch operation and staffing, emphasis on mobile banking and other technology solutions, adjusted certain product offerings, and made many other changes to adjust to the current and expected future environment, and adjustments will continue to be made. Annualized return on average assets for the quarter was 1.63% compared to 1.81% in 2019 Q3. Annualized returns on average common stockholders' equity and returns on average tangible common stockholders' equity for the quarter were 10.48% and 12.52%, respectively, slightly higher than the 10.22% and 12.33%, respectively for 2019 Q3. Loan-to-deposit ratio was 91% within their historical range of 90 to 99%, lower than 93% in the previous quarter as the management has been conserving more cash for the economic uncertainty, sacrificing short-term growth for stronger capital position. Book value per common share increased to $32.37 in 2020 Q3 from $31.78 in 2020 Q2 and $32.19 in 2019 Q3, with a 10-year CAGR of 21.4%. Tangible book value per share increased to $27.13 in 2020 Q3 from $26.53 in 2020 Q2 and $26.30 in the 2019 Q3, with a 10-year CAGR of 19.6%. This latest tangible book value per share of $27.13 is about 13% higher than the share price of around $24 in late October 2020. Dividend was $0.275 per share, a 0.9% increase from the $0.2725 in the previous quarter. OZK has been increasing dividends in each of the last 41 quarters and every year since IPO in 1997. Diluted earnings per share for 2020 Q3 were 84 cents, a 3.7% increase from 81 cents in 2019 Q3. Last 2 points just to show how thoughtful the management team of Bank OZK is. First, on an appraisal process, Bank OZK normally re-underwrite and re-rate every loan in the RESG portfolio at least once annually. With the advent of COVID-19, the volume of new appraisals went up but was still within a normal range. To deal with appraisal, they have a separate internal appraisal team engaging with external appraisal firms so that the appraisal process is not influenced by their lending team. Second, with regards to dealing with loan modification, if the management evaluates and agrees that the borrower truly needs a loan extension, the management requires the borrower to put up the same number of months of future payment as it is extended and rebalance the reserves so that OZK does not take on much more risks. Join Out Investment Forum at Facebook. Link in the description below. Check out some of our in-depth company research at moneywisesmart.com/research. Link in the description below.